Hey guys, good afternoon. Sound check, please. Sound check. How's everybody doing? Thanks, Eric. I sure had a good day today. I hope you did too. All right, we're gonna get started here. First, let me know if you have any questions at all. If there are any questions. There was something I wanted to tell you today, and that was I wanted to tell you that you know, I notice in swing trading more than day trade, more so than day trading, that that what that they often I go through a time where things either work, like everything works, or almost nothing works. It's just the way it is, and I'm not talking like, oh, nothing works because you're going short and the market is long. I mean, nothing long, nothing short, and sometimes everything works. And I want you to, and I know in swing trading, it's really just the environment. Is sometimes it's really good, sometimes it isn't. And you can't control it. You can only do one thing, which is as soon as you feel it's not a great environment, no follow through or whatever it is, you just ease back, right? Take a step back and lay low or play with smaller size. Today, I think I had 4 or 5 trades trigger. Let me just show you. One of them I made a mistake on, and that was the PBYI, because it was gapping 5%, so I canceled the trade, and it would have actually ended up triggering, but I didn't get it. So that technically triggered. Keys, okay, that triggered is up 50 cents almost. Okay, BDSI, break even, didn't go anywhere. AXON triggered and came right back down. Hey John, which one? Sorry, I was going. So here's the list. PBYI was 44.60, so over 44.60. So that should have been the trigger. Now it gapped up today to. I'll tell you where it gapped to. It gapped to $46. So I said I wouldn't even want it if it were to get crushed $1.40. I wouldn't even want it at that point. And then if I see it pulling back, then I'll look into it again and see if I want to get it. But I forgot about it, and it went right at the open, and I didn't. I ended up not getting it basically. But either point, it didn't really. It would be up 15 cents because my entry was at 44.65. Would have been at 44.65, the one that I canceled. CRK. Now, some of these are long-term. They're not swing. So like the CRK, I mean, my stop is here. Yes, I have half a stop here and half a stop there. But as you can see, it triggered over the base. I'm doing this because of the monthly. Have you seen a better monthly chart than this? Do you have a better monthly chart than this? I don't. I mean, that's just as good as it gets. It's been basing for how many years? 1, 2, 3. So it looks phenomenal. If it can just go, if it can just pop and follow through. And the reason why I know this is good, it should at some point get follow through, is because of the gap. The gap that day and the run up. So it's basically digesting the move still, probably. It rallied 100% in about a month. So I may be just trying to get it a little too soon. We'll see. But what I wanted, the point of all of this is not to show you the plays, but I'm happy to show you the plays, 2 of which negative, break even, positive, and I didn't get, right? But to show you that nothing went anywhere. Yes, in this case, they were all long. But if I were to look at the short ideas, I called a bunch of short ideas. If you look at this sheet, so the longs, right? And then at the bottom, I can't scroll down for some reason. At the bottom here, they're all short. But, nothing went. And then last week, it was like whatever I picked worked, right? Just whatever I did worked. And I thought about it today and I said, wow, I better share this with you, that I want you to consider that when you're struggling or when things are not going right, I want you to also consider that it's not just you. If you know that you're not the one that's totally messing up, right? Because oftentimes it is us. We're the ones that are messing up. But if you know you're doing what you normally do, you don't have anything going on personally that would like some significant event or personal that's going on for you. Um, I want you to consider that it can and may very well be the market environment. It is probably the market environment. And when that's the case, you just lay low. Try your best. It's really, really hard to lay low. I know it sounds oxymoron, uh, because, what do you mean it's hard to take it easy? Hard and easy in the same sentence, right? It's hard to adjust is what I'm trying to say. It's hard to get yourself uh, to be in the zone and then have to kind of say, no, I better take myself out of, I better not be aggressive. It's not an easy skill to develop, but you can if you try. Might take a little bit of time. You can. The absolute most important skill you can acquire as a trader is becoming flexible or adaptable, basically. The most important skill. It is so important. I mean, I just cannot tell you how important it is. You know it perhaps from your personal life when if you're always rigid, you know, you meet a you meet somebody, or you're at work doing something and everything is going great, you know, um, it's easy to be yourself and to be rigid, and because everything, when something goes wrong, and if you're that type of a person, oh boy, I mean, God have mercy on your coworkers, or on some, you know what I mean? So in trading, it's similar. You have to be adaptable. You have to adapt to the market environment, because if you don't, the market will just crush you. If you continue to be aggressive when you're not supposed to be, but in exactly the same way though, if you continue to be very, very passive, passing on most plays and laying low, and waiting for the absolute perfect setup before you pull the trigger in a great market environment, you'll never make money. So, does that make sense? The knife really does cut both ways. You have to flow with the market. It's so hard. It really is. I find it very, very hard. And yet, it's the number one skill to have. It's not discipline, it's not patience. I mean, gosh, I've had my best months, looking back at my career, or the last few years. I've had my best months was when I wasn't patient at all, wasn't disciplined, was going through a lot personally. Sometimes I ended up having the best months ever. Why? Because the market was just pouring. It wasn't just raining opportunities, it was pouring up. So, and I just was aggressive and I was able to pull it off, even though I may not have traded that well. So, okay, does that make sense? Totally get what you're saying. What can one do other than notice the daily P&L shifts? Uh, it's not, yeah, I mean, good question. I don't mean the P&L necessarily. You just kind of notice the environment. Are things following through? Like, you take the JD today. I mean, that's a picture perfect trade. And the market was selling off. That's a picture perfect trade. Okay. How did it play out? Didn't go anywhere. What was the other one? Tahoe. Now, Tahoe, we ended up getting lucky because I set the trail to 68. That's a picture perfect trade. Where did it go? Nowhere. So when you notice stuff like this, you just have to lay low. I also noticed, for example, that I mean, to tell you the truth, if I didn't have to moderate, I probably wouldn't be. I would only trade the first hour right now and then call it a day. I'm not even kidding, because it's really, really slow. Twilo made it 800 or very close to $800 for me, 873 or something like this. At the end of the day, I got lucky. I mean, I almost feel like I got lucky that it followed through. Now, having said that, I had immense confidence in it because I got the volume spike towards the end of the day. I just knew it was going to work. That's why I called it. No hesitation, nothing. So this was an hour and a half. But I did notice this afternoon that the 15-minute, and not just this afternoon, I mean, last week too, the 15-minute setups, sell setups, buy setups, have not been really going anywhere. So this is a little bit, I mean, this is totally different. This is a Climo. So for me, it's, you can look at it in terms of the P&L, but it's better to just pay attention to the setups in general. Are they working? Are they not working? Now, if the setups are not good and they're not working, well, they're not supposed to work if their setups are not good. But if the setup is really good, I mean, like I showed you, the JD in my book, that's picture perfect. That was picture perfect. The Tahoe, picture perfect, pretty much. And they don't go anywhere, then you know there's something wrong. The RRD, but I didn't do the RRD. Ifan had a call on it. Oops. I mean, that's pretty good. Where did it go? Nowhere. Okay, does that make sense? So there might be a better way to figure out whether you're in a good market environment or bad market environment, like a more concrete way. I just can't think of it at the moment, but I can sense right away almost what kind of an environment we have. And that's when I have a choice, whether to continue to push it or to lay low. Okay, and I'm usually, most months I'm pretty active. If I tell you how much I averaged the first 6 months of the year, you might fall off your chair. You might actually not believe me. I averaged almost 500,000 shares a day, 400,000 shares a day, or something like this. Okay, and I did a video, but that was back at the end of the May or so. I netted $1,200 a day net. Okay, while averaging that kind of volume. And now what am I doing? I don't know, 20, 30,000 shares a day at the most. So not even 1/10, right? Is that right? I mean, so from 400, yeah, 1/10 of the usual volume, not even, right? 1/10, 1/20th to 1/10. Okay. So what is that? So I'm laying low. I am. Again, if I didn't have to be, I PM'd. We have a Skype group, Ryan, Ifan, and myself, and I PM'd them and said, I don't know what I said exactly. I said something like, the afternoons. Oh, this is the time of the year when I don't necessarily like being a trader. In the afternoon. Today is, now that was before the Twilo, but notice the JD wasn't going, the Tahoe wasn't going, and it's true. If there was a time of the year when I don't enjoy very much being a trader, it's this time of the year. And it's not the open. The open is fine. Remember the Tahoe this morning? Do you know how many hours that was? 5 hours. Now, did I get filled the correct share size? No, I didn't. I also got filled a couple pennies later. The initial, I mean, I did get filled 2,000 shares initially, but then I had 4,000 shares. It got filled late. But this was a 5-hour trade. So the open is okay if you're picky, if you're really picky. Now, why did I go after the Tahoe? Does anybody know why? Can I tell you why? May I tell you why? Here's why. Because you might think, well, this is not gapping under a green bar. In fact, it's gapping under 3 red bars or 4 red bars in a row. 1, 2, 3, 4. and it's extended, and in the direction of the long-term trend, we usually like gaps that break the trend, that basically produce shock value, like the HIB the other day. Everybody was thinking higher. How do I know everybody was buying it? When I say everybody, I just mean the majority. How do I know? Because look at the price action. You know, green, 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 green. Look how much it moved up. So people were buying it into earnings, and then it gapped down. So that's the type of gap that I normally would reserve for the open, right? Because it has, I know people are in pain, in a lot of pain. They're going to look to sell, they're selling, should drive the stock lower, right? But why did I go after the Tahoe today? Because here's why. Um, Number one, it's a low price stock, but it's not just because it's a low price stock. But I was just going to tell you that it's a low price stock, and sometimes low price stocks, a lot more than this happens with a lot more regularity than on the higher price stocks, on the normal $20 to $100 stocks, whatever, right? Where if it's a low price stock and the stock is very weak and then gaps down, it cascades. I mean, it could lose another 50% after the open. If it was a $50 stock, yeah, it might have dropped a dollar or two and then snap right back up. But sometimes these low price stocks that are down a lot, like this one, from 550 to, that's 40%, and then still gaps down. Institutional money and even individual investors start to feel, whoa, this might be going to zero. And so they just think it's junk, it's not worth anything, get out at any cost. But get out at 3 better than getting out at $1 or 50 cents. So I know that about small, low price stocks, right? Number two, you can tell this wasn't very novice. We do like we do consider gaps after red bars to be novice, but we need to have these kind of bars at the end. So, you know, if it had 2 or more big red bars and then it gapped down, then I would say, yeah, novice. But I also know that novice gaps don't work very well on low price stocks. So even if one thought this was a novice gap, knowing that it's a low price stock should have kept you out of it. But again, we also didn't have a wide range red bar or any wide range red bars. And then it was kind of breaking down. And then number 5 or number 6, or the sixth reason why I went after it, is because this is a very liquid stock and no spread, just with a 1 penny difference between the bid and the ask, no spread. So I can, unless, you know, except that it was on an uptick, this is the sort of stock that I can get in with a lot of shares, and if need be, meaning, let's say, you know, if I were to, let's say it had a 3-cent stop, but let's say it had a 10-cent stop, okay, or it had a 20-cent stop. Let's just assume it had a 20-cent stop. Based on a $500 risk, that means I should get 2,500 shares. But what I do sometimes, and this is how I can have a lot more R's per, I mean, for a play like this than another play. What I can do with the highly liquid stocks that have no spread and have thousands and upon thousands of shares at each and every level, at each and every price, meaning 277 by 276, you'd find 500,000 shares at 277, 500,000 shares at 276. What I do is often is I trade it off level 2, meaning as soon as I see the bid is weak and the stock is going, I might do instead of 2,500 shares, I might do 10. And if it takes out 277, it goes against me by 1 penny, I'll exit the extra shares. Does that make sense? This way, if it cascades, if it drops really hard, then I got a lot of shares. And I can manage it penny by penny all the way down, like I did with my 3,000 shares, because I had already exited half at 91, I think. And in the back half, went all the way down to 72. And I got out back penny by penny. But again, I had 3,000 shares. I didn't have 10. But that's what I do. And here again, by the way, here again, you know how I just told you about how I trade off of the level 2 sometimes? Not this time of the year. Right now, yes, you can find plays here and there. The other day we found the MIK was from EFON also, was a perfect, had perfect level 2, right? No spread, penny by penny, lots of shares on each level. Okay, but I'm not finding plays like this every day, so I don't try and scalp plays off level 2 like I was doing just a couple months ago, right? Because now it's a little slow, and I know level 2 trading or scalping requires a lot of momentum, and if you don't have the momentum, you're probably just going to spin your wheels, waste money on commissions, and and not make any real money. So I don't even try. How hard is it to be making a lot of money doing something, and then the next day, you turn the faucet, you yourself turn off the faucet, meaning you yourself have to stop yourself from doing it, from continuing to do that. It's extremely difficult. As we teach in the Pristine Method, we say rewarded traders always repeat their actions. Rewarded traders always look to repeat their actions, right? So as a trader also, when I get rewarded doing something, I want to continue doing it. But I know better now, right? If I sense the market is shifting, I immediately go with it. I try to immediately shift my strategy or my approach, my aggressiveness, my attitude towards it. Okay. You need a lot of pressure. Yes, you need a lot of pressure. Right. That's a good word. You need a lot of momentum in one direction. A lot of pressure. Yes, that is exactly right. Like the Tahoe today, the MIK on Thursday, I think. Or no, Wednesday. You need a lot of pressure. Now, if you want to know what I'm talking about, I don't, because the market is now not moving. 1 second, please. So I did a video on level 2 trading for T3 a while back. It's been a while. And wait a second, please. Trying to look it up. And then, so it's there where I, talk about it, explain how the process works. So feel free to watch it. Okay, let's see where it is. Just gonna copy it. I really need to have it available at all times because it comes up a lot, right? I mean, I should have the link for it readily available, but it's one of those videos on part of our Black Room watch list. Okay, here it is. Just found it. Okay. All right. So that is it. Okay, any other questions? Let me know if you have any questions at all. Now, being proactive also means that if you know yourself, you don't have that, you haven't yet developed the skill to flow with the market really well, then when you know it's a slow market environment, just take off, do something else. You have, we all have things in our personal lives that need our attention. Maybe that's when you switch gears and focus or take care of that, right? I'm just saying, if you don't have what it takes, then you don't need, I'm not going to go, it's like, if you know you're going to get beat, then don't do it to begin with, right? That would be the smart way to do it. Does that make sense? So if you know you're still learning, you're not going to be able to be flexible, okay, that's no problem. Then just be proactive enough to and remove yourself from the environment rather than let the environment kind of take 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 you places you don't want to be, right? You don't want to go. And I'm looking at the charts. I want to tell you, you know why I like the Twilo very much? Because I know, here's what I do know, that strong stocks that are going almost climactic, um, will often top out towards the end of the day. Okay, so if I get a climactic run up that has been a stock that's been running all day, and I finally get an entry towards the end of the day, this was closer to, it was at 315, and so it wasn't quite at the end of the day. But if I get an all day run up, never pulled back, meaning, you know, it never like came in and then went back up. No, it was an all day unidirectional run up. Then I know when I see a good setup at the end of the day, I'm taking it. It's a high odds play. But I also saw the narrow range bar. I saw the biggest volume bar. Let's see for how long. I mean, look at this. This bar. I know it doesn't look that big because at the end of the day we got a huge bar. But here's the bar. That's the biggest volume bar actually since 10:55 a.m. The biggest volume bar. All right, on that narrow range bar. So we definitely got a spike in volume. And again, towards the end of the day, I felt this is good. This is going to work. I had no hesitation at all. I just knew it was going to work. 30 cents. And it worked right to target. I did take half early, but that was fine. That's fine. I'm learning so I don't take a lot of risk. I got Netflix. Hey, Shirley, at 9:17 on the 5-minute. Analyze the entry. Sure. What time frame? Netflix. What time frame? And then did you play short or long? Oh, you got in Netflix put. I got it. So you basically shorted it. Am I right? Let's take a look. Yes, at 9:17. At 9:17 a.m. Oh, at the open. Wow. Is that right? 9:17? What's 9:17? Pre-market? Or is it 9:17 your time? What Central Time? So 10:17 New York time, right? 10:17. Okay, we had a sell setup. Right? So we had a sell setup. It was a very strong retracement. So I personally wouldn't have done it. But let me just look at multiple time frames. Give me 1 second, please. Just gonna link the charts because I unlinked them when I was scanning. So we had a sell setup on the Netflix here. Yeah, and I already had a topping tail. Yeah. I'm just going back on my other platform to see. 10:17. To tell you the truth, this was probably, better as a climactic. I mean, this was more of a climactic short. I mean, that's a climactic run up. Look at the run up here. Huge run up into 10 o'clock reversal time on currently a weak stock. So it was not bad under 367.89 as a short. At 10:17, would I have done that sell setup? Not me. I wouldn't have, because I like everything to be in order. And in this case, it was a bit of a too strong of a retracement. Personally, I think this was too strong of a retracement. But again, good daily chart, climactic run up on the 2-minute, really good hourly chart, like you pointed out. So it worked. Eventually, it worked. But personally, I don't do stuff like this. I don't do a strong rally unless I'm scalping it, unless I'm playing just the, that mini climactic run up. I'm looking for that initial drop and then done. But I don't usually short something that has had a strong retracement like the Netflix did, where it dropped a lot. Look at the big drop, and then it retraced 100%, more than 100% of the initial move. So to me, there's something wrong. It's too strong. Now it ended up working, but personally, I wouldn't have done it. I'm glad it worked, though. I'm glad it worked. Okay. Any other question? It didn't work? Oh, I'm sorry. How did it not work? I mean, it did go back up, but I don't think did it ever take out the highs? 368, 368.88. I guess it took out the highs by 8 cents here. Is that why it didn't work, you're saying? You got stopped out. Yeah. Again, what was wrong with it is what I said initially, is too strong of a retracement. When I see a stock drop and then retrace 100%, that's not good. That's not. So if you still think, whoa, no, I love the gap, I love whatever, I really like it, then pass on the first entry. Why? Because it did something that it shouldn't have done. If it was weak, it shouldn't have retraced 100%. So as you can see, maybe the first sell setup went back up and failed, but the second one worked. And not that I would have done it here either, but usually I don't, I would never short something that retraced this much. Here's the initial drop and retraced over 100%. Shirley, does that make sense? So that's what's wrong with it. In my opinion, that's what's wrong with it. I also personally, now Netflix, Amazon, Apple, the high flyers, Baba, Nvidia, a lot of new traders are attracted to those stocks, especially if you do options. They're good for options because they move so much. But generally speaking, volatility when you are new to trading is not something. It's not your friend. Honestly, volatility is not necessarily a good thing. It's not your friend. So huge volatility. Now, controlled volatility. The Tahoe today, as Stan said, it had a lot of pressure, a lot of downside pressure on it. So there was a lot of volatility, but it did it penny by penny, literally. One penny at a time is how it dropped. That's controlled volatility. It's high momentum, but controlled. Something like that, the Netflix, Amazon, Apple, Google, Baba, Nvidia, those are, they have the momentum and the volatility, but it's very erratic. It can also go against you really quickly. Does that make sense? So that's why I don't go there. I don't go there because I don't want to put myself in a position where I get caught, right? I don't want to do that. As a professional trader, my number one goal is always to control risk. My number one goal is to always feel in control. You know how you feel when you feel like you're trapped in something? How does it feel when you're trapped in a situation? It just doesn't feel good, right? Well, that's how I feel when I get the feeling that this stock can run me over, that I don't have total control over what price I'm going to get filled or where I'm going to exit, that I might not be fast enough for this stock. When I feel that way, then I just can't trade because I'm too nervous. So I stay away from these stocks. Now, again, if you're doing options, then I understand why one would trade them. But that's the problem with these stocks is they move way too fast. They just move way too fast for the average trader, including me. And I've been doing this for a long time. I don't know of anybody that can trade as fast as I do with the keyboard. I have hotkeys for just about everything, and I still think they move too fast. And oftentimes I find, of course, they're the high flyers. That's what traders are attracted to. They think, wow, look at, you're trying to do a stock that moved. You're focusing on a stock that moves 10, 20 cents at in this case 60 cents. Nvidia does that in 5 seconds. So they think, well, I would rather do Nvidia then, right? But it's I can control my risk here. In Nvidia, I can't, right? I can control my risk, and I can actually, if 60-cent move is also a huge move because I can have big share size while still controlling my risk, right? And Nvidia, I can't control my risk because it moves so fast when it does, right? Let's see. Hey Fabio, was not able to find a short pattern around 11:30. I waited the pullback after the breakdown of the congestion. That never happened. Which, oh, VZ. VZ, I'll take a look at it, but I do think, so you waited for a pullback after the breakdown, which never happened, at 11:30. 11:30, I thought there was a 15-minute sell setup, but you're right, it wasn't that good. You know what was good about it? There's only one thing that's good about it, in my opinion. The money bar or the shakeout bar. This was a breakout bar and turned into a topping tail bar. So that was interesting, and it worked. And you're right, you didn't get a secondary entry. If you didn't do it here, under 35 by 45, you missed out. It happens all the time. In this case, again, I just want to point out that this is exactly the kind of bar you want to see when you're going short. It's when the stock tries to pop, tries to go higher, and this green bar turns into a topping tail bar. And then the very next bar breaks under the low. That's a high odd trade right here. High odds trade. Now, if you said, well, didn't like the bottoming tails, the extension, then sure, I understand. And if you passed on it, you never got another entry, which is, again, it happens a lot. It's not something that needs to be over-analyzed necessarily. Okay. Yeah, you trade these stocks when you want to see your blood pressure still working. Good point. That's the time to trade these. Or right now, the cannabis stocks. I'm sure they draw a lot of attention. They attract a lot of novice traders. The cannabis stocks. I mean, come on. These are way too wild. Even though they're not $100, $200, $300 stocks, they're just way too crazy. In fact, a stock that's moving up like this does not adhere to normal technical analysis. I remember taking a shot at it just a few days ago, or this day maybe. Short. It looked perfect. Zero follow through. Right? Because why? It has so much momentum to the upside that a bearish pattern easily failed. Yeah, there's a kind of a feeding frenzy, and I don't want to get in the middle of it. I would rather, actually be, go find another place where I can just feed by myself. Just feed by myself or with a couple of other sharks, and that's it. I don't want to go after the stocks that attract a lot of eyes. I want to go after the stocks that are maybe don't attract as much craziness. And I learned that about myself personally many years ago. I really don't ever play video games, but a few years ago, I played, I don't remember what game it was, Call of Duty or something like this. and I played it with my little brother at the time, just for fun. And I noticed that I was I was more of a sniper than, I wanted to hide and then surprise him, and hide and ambush, versus he just was way too aggressive. He didn't try to hide. He was just trucking away, trying to just, that's his personality. For me, I like to strategize. I like to think and be careful. And it's not always the best approach necessarily. Sometimes I talk myself out of good trades a lot, but that's who I am. I like to, again, strategize, make sure all my ducks in a row, so to speak. Everything is lines up. If I was looking at a pullback, the retracement percentage is good. The location is good at the moving average or at support. The daily looks good. The timing with the market looks good. The reward to risk looks good, and most important of all, it looks good on multiple time frames. Does that make sense? So if I want to make sure everything checks out. Somebody might say, might have a different approach and might make just as much, if not more, might be even more successful. But I know myself. I know what I feel comfortable, what I feel comfortable with, and what I don't. And I just you have to play to your strengths, not your weaknesses. You can't trade like somebody else that you're not. Does that make sense? So it's important. The best approach is the approach that suits your personality the best. That's the best approach. It's not my approach is the best approach, not somebody else's approach. Does that mean? And in Market Wizards, what did he say? So this guy in the book Market Wizard goes out to interview the world's best traders, thinking he wasn't a good trader himself, thinking that he was going to find thinking that they all did the same thing that made them so successful. And he found out, to his utter amazement, that no two traders traded the same way. No two traders were alike. Each and every one of them was different, had a different story, but they did have something similar. And that is that they all traded in a way that suits their personality, their own natural personality. And I heard Jack Schwager give a speech one time, give a talk, and he said, if you take nothing out of this talk but this, which is that you have to find a way that suits your own natural personality, then your time, this was worthwhile attending. And that was very, very early in my career. And I felt, wow, if he's saying this is the most important thing, his most important finding, it's the one common denominator amongst the one common attribute that he found when he interviewed supposedly the world's best traders. I better get on it. So I started writing in my journaling, and I started writing in my journal, figuring out what are the strategies that are available to me as a trader, as a pristine trained trader. Which ones did I gravitate towards? Which ones did I think were good for what time? Like, gaps at the open, but what about later in the day? What about, right? So I started to think about these things a lot, and it helped me like nothing. I mean, it helped me more than anything else. It really did. Because again, it got me on the right path, which is you have to trade in a way that suits you, right? And I got to think about that really, really early on in my trading, not 5-10 years later. It's also, I think, the same in I don't know, I don't have a better example, but in relationships. You have to find, if you're looking for a partner, you have to find somebody that suits your suits you, not just good looking and right, or just has one attribute that is really positive, but the person you need to be compatible. It has similar value system, otherwise it just won't last. Right? Same, and again, this is not the best example, but I couldn't think of anything else. The same in trading. You have to find a way that suits you as a person, and not be talked into doing something that doesn't really suit you. And this is the danger of being in a trading room, by the way. I'm not encouraging you to not be in a trading room, but I'm just telling you that this is the danger of being in a trading room, where somebody, the leader, is on the microphone yelling out, calling out plays, and you're supposed to follow. But again, what if these plays don't suit you? Then are you really supposed to take them? No. And that's why it's really important when you're in a trading room to be self-aware a little bit, to be kind of okay, you can follow, but you should only do the trades that you like yourself. If you don't like them, no matter who it is that's calling them, you shouldn't be taking them. Because if you don't like them, you're not going to have the confidence to stay with them. You're not going to have the mindset to manage them properly, whether they go against you or for you. And you're going to be trading in a way that doesn't suit you. So this is the real danger of being in a place where you're following somebody. Because if you do that, then you drop your own critical thinking and you start following, and without your critical thinking, without you personally being on board, you totally and fully agree with the trade. It's something that you would do regardless of who's calling it. If that's not the case, then the trade is not for you to take. Okay? It's our own innate intelligence or critical thinking that really puts us at the gate to profitability. It really does. Without it, we cannot be profitable traders, consistently profitable. Catching up on some comments. Do you need to retool these pristine style techniques as the market changes over time? Eric, good question. No, you do not. I wouldn't be able to even, they are timeless, and that is the truth. It's just a matter of it's just a matter of what's currently working. If it's gaps at the open, then bravo, focus on gaps. If it is afternoon plays, then focus your attention on afternoon plays in the afternoon session. If it's climactics, then focus on those. But if it's scalps, then do the scalps. But the setups, the patterns, the strategies, they're timeless because they really depend on trader psychology. Patterns repeat because traders we don't change. Human nature doesn't change over time. You go back thousands of years ago, there was people were the same as they are today in terms of, not in terms of their lifestyles, but in terms of their psychology. They had greed just as much as we do today, maybe fear, right? When a stock is falling against them, even hundreds of years ago, they would panic like they do today. So it's the same thing. So it's the same psychology, and that's why the patterns don't need to be retooled or revised. What needs to be retooled or revised is our actions, our aggressiveness, our approach, basically. Sometimes we should be aggressive, and sometimes when it's raining, you know, go out with the biggest bucket that you can, or when it's pouring, go out with the biggest bucket that you have in the house to collect the rain. And when it isn't, maybe it's not worth your effort, right? Let's see. North, how long did it take you to find what suits you personally? Did you just review the results from each strategy to see what fits you, or is there other ways? Good question. I did not. I found out what suits me within months, and I did not. I didn't determine what suited me based on result. I determined what suited me based on logic and based on how I felt. Meaning, when I started analyzing when I started thinking about what is available to me as a trader, as a pristine trained trader, I realized that at the open, if I were to do plays at the open, something like, long over this bar is high, stop under the low. Would I ever call like this here, the stock is going sideways, I'd say, for no reason at all, long over the bar, stop under the low. Would I ever do that? No. Why do I do it at the open then? All the time, every day I call plays over the bar is high, stop under the low, or vice versa. It's because of the gap. So what I'm saying is, if you trade the open, then you better be trading gaps, because there are no trends yet. There is no relative strength, relative weakness. So you better be trading gaps. So I said, okay, that makes sense. But then after the open, what else is there? What can I do after the open? I said, okay, it's simple. After the open, I must focus on strong stocks and weak stocks that stand out, really, really bullish, really, really bearish, and buy the bullish ones and short the bearish ones. And then my mind said, okay, but then how do you do that? And my other self said, well, you were taught to play base breakouts and pullbacks, and price corrects through time by going sideways, or through price, or stocks correct through time by going sideways, or through price by pulling back. So I said, okay, perfect. I can do breakouts and I can do pullbacks when I'm playing long, and breakdowns and counter rallies, and sell setups when I'm playing short. Perfect. Is there anything else? Oh yeah, there's also the 1, 2, 3 pattern, which is another form of a breakout. There is an M or a W pattern, which is another form of a buy setup or a sell setup. But I realized that, okay, I'm going to play long the bullish stocks and short the bearish stocks, and I can really primarily do them through two setups only: breakouts and pullbacks, or breakdowns and sell setups, and counter rallies, right? And then there are variations. And then my other self said, but is there anything else other than strong buy strength, relative strength, short relative weakness? Is there anything else out there that I can do? And then my other self said, yes, climactics. That's another thing I can do. And bam, light bulbs went off like crazy. That was a huge discovery for me. I discovered that there's really, truly only 3 strategies. Now, I later on added other strategies, such as power trends, scalps, level 2 trading, right? That's extracurricular stuff. But the 3 main strategies that I do to this day, since day one, since 4 months after I started trading, have never changed. Gaps, so that's 11 years ago. Gaps, and then relative strength, relative weakness, and I get in it either on a pullback or a breakout, depending on how the stock is setting up. I don't control the stock, so I just wait for a setup, and if it's a breakout, then great. If it's a pullback, then wonderful. And then so gaps at the open, relative strength, relative weakness after the open, like say at 10 o'clock and after, I start looking for stocks that not only have good gaps maybe, but also have good intraday relative strength, relative weakness to the market. And then number 3 is climactics. Perfect. And there's nothing else to do, almost. So when I discovered that, because nobody taught me this, I just discovered it through research, not research online, but research, researching, looking deeper into the methodology which I was just taught. I felt that I know exactly what I knew exactly what I was gonna do, and then I discovered that sometimes gaps is the thing to focus on. Sometimes it's climactics. I mean, to tell you the truth, climactics, there were even, I was gonna say months, but even years when climactics was just the bomb. It was the best strategy. Nowadays, not so good, but not as good. But I realize that those are the three strategies, and I just have to figure the 3 main strategies, I should say, and I just have to figure out which one which one is primary at any given time or any given period of time in the market. And I know that sometimes, I may like, some people might like breakouts more than pullbacks. That's fine. That's a personal preference. If you like breakouts more than pullbacks, go for it. But the main strategy behind it, or the main reason why I should be looking to buy the stock, is not necessarily because of the breakout, but because it's showing relative strength. It is standing out, right? It is standing out, and the breakout or the pullback is the pattern through which I end up buying the stock, right? Okay, you're not comfortable with gap, with gaps, so you don't take them. I understand. I understand. But if you trade the open, then that's really the thing to kind of, if you're trading the open, that's typically what you should be focusing on. Now, if you say, well, I don't like to trade the gaps, then maybe you should back off at the open, unless your results prove otherwise, unless your results are really good trading the open. But if I didn't trade gaps and I just traded stocks that were not gapping, right, non-gappers at the open, I'd lose money. I would probably lose money to this day if I did that, if I attempted to do that. So just make sure that you're okay with the result. Otherwise, I would try my best to learn gaps or not trade the open at all. Has anyone calculated the probability of success for various patterns? Oh yeah, I mean, I track the plays, the patterns. The problem is they're different. They're different all the time. So that's the problem. So that tells me something, doesn't it? Should tell us something, which is it really depends on the market environment more than anything. It depends on the market environment. The most important stat that you can track, is your P&L, or your result by strategy, meaning how much are you making or losing playing gaps at the open, playing relative strength, relative weakness, playing climactics, whatever it is that you do. You can even, and then what's your batting average? What's your Sharpe ratio for that strategy? What's your whatever? You can track many other aspects, but the most important piece of information you can track is your profit or loss by strategy. There's the result by strategy. All right. Okay. What else? Any other questions? Let me know. I want to show you one other thing today before we call it today. I just want to show you one other thing. So did this look good or what? Short, the market. Let me just, one sec. Oops. Oh, did the market look good on the hourly chart or what? It did. It looked pretty good. As a nice rounding top now, or moving average flattened out, started pointing down. Then why didn't it work? Right? Why didn't it work? This is when you have a really bullish market. This is what happens. You get the sell set up, 15 minutes, and that's when it, that sell setup should be a high odds play because the hourly looked good. The larger time frame, look what happened. Failed. That's because of the market environment, because the market is very, very bullish right now. So things don't pull back that much. There's no fear. People are not really, when the market starts to come in, you don't get traders to pile on and exit their positions for fear of giving back profit, because there's no fear. There's not much fear. So you get the sell set up, and then there's no follow through. Okay, which I don't like personally, because I'm a bear. I like to short a lot more than to play long. Most of my plays are short, so I like to see follow through to the downside. I can't wait for the market to top out. Not that I'm long the market. I mean, I have the Qs, I have the long, I have my entire 401ks in the S&P. So I want the market to do well, obviously, and I'm not wishing for a crash in the market or in the economy. But as a trader, as a day trader, I find it so much easier to trade and make money in bearish market environments than I do in bullish market environments. So, and the market has been in an uptrend for 10 years. In March 9th of next year, it'll be 10 years. Exactly. Basically, the longest market in the history of this country, the longest bullish market uptrend. It started when Obama took office, shortly after, and he was in office for 8 years, and now Trump, this is his second year. Okay. Yeah, right. If it went down, exactly, that's how people think. If it went down today, no problem. Right. There's not much fear. Not much fear at all. Okay. Any other questions, guys? Any follow-up questions? Trading related questions? Relationship, I'm kidding. If the US market would crash, the DAX would go to zero. Oh, yeah. The German stock exchange, right? Maybe. Okay. Yeah. How is the German stock exchange doing? Is it like ignoring Trump's threats of tariffs, or is it's falling? Okay. Interesting. Is it really falling in a downtrend? I wonder if is there a way to look it up? Yeah, very weak. Okay. Yeah. Interesting. Interesting. Trading View. Okay, I'll look it up on Trading View. Yeah, because I have an account with Trading View, so I'll look it up. EM stands for what? What's EM? Sorry, maybe I should know, but what's EM, Eric? What country? Oh, emerging markets. Oh, I see. Okay. All right. Okay. All right, guys. Well, we'll call it a day. Hope you enjoyed today's discussion, and I hope I was able to answer your questions. I will talk to you all tomorrow morning. Have a nice evening. Get some rest. and we'll be back at it tomorrow morning. Take care, everybody. Have a good night.